What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is April 24th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we've got a jam-packed episode where I'm not only going to be sharing my number one metric I'm going to be watching for when it comes to Bitcoin's price to determine whether or not we've really got the legs to kick off a new major bull run, or if we're set in for a potential collapse or correction down towards some of the key moving averages, potentially for an even worse correction as well. And outside of this, well, we're going to be talking about where we can find strength in market prices, trying to figure out which kind of assets could really outperform in the altcoin sector that could help us to position ourselves well in the event that things start to churn higher. And last but not least, we're going to be diving into the macro, talking about what's going on in the broader stock market to try to get a gauge of whether or not we're seeing more risk on or risk off sentiment. So if you happen to enjoy this video, consider dropping a like. It's one of the greatest ways you can support the channel, and let's go ahead and kick things off. So I want to start here by talking about the number one metric that I'm watching for within Bitcoin's price. And I want to talk about why it's significant and why we've not only talked about it so much in the past, but how this is a historically significant indicator, which we'll kind of showcase as well as we go into talking about equities as well as altcoins. Simply put, our key metric here that we are watching is determined by price, and that is the 21-day moving average, or the 21-day pocket. Now, generally speaking, the 21-day pocket or the 21-day moving averages, this is the simple or standard moving average as well as the exponential moving average for the overall Bitcoin price. And essentially, this is taking the last 21 days worth of closes and giving us a nice line that's changing over time of the interpretation of price, right? So as price is changing over time, these moving averages change. As price generally trends higher, the moving averages will also follow quite swiftly, and vice versa. When we start to see more downward move in price, the moving averages will also trend lower as it's taking the average over the last 21 days. So why are moving averages so significant here? And why do we talk about them so much in this channel? And why am I bringing your attention to the 21-day moving average? Well, the thing is that moving averages has been around for a long time. And they're one of the clearest indicators out of there that can actually help to determine whether or not price is starting to see trend shifts. We can see, for example, on breaks of the 21-day moving average, like we saw back here in January, we saw a substantial correction down to the next psychological level, which is the 100-day moving average, whereby buyers started to come in. And we saw something quite similar here. As we broke the 21-day moving average, we came incredibly close to touching that 100-day pocket here, or the 100-day moving average, just by about $1,000 margin. So that could have given us a great rebound opportunity. It's a big reason why we bought, for example, a short-term trade on Render back last week during that corrective low. We actually pretty much timed the bottom on it. We made a really great trade in the short term. We're able to enter in with a pretty sizable position because we had the conviction that the 100-day is going to serve as that first psychological rebound range. Some people even carried forward and made even more money on the trade. But now we're coming up here to the point again, where back in January, we have to ask the question of whether or not we can clear through the 21-day. Because if we can't clear through the 21-day, this is usually a historic sign that a longer-term trend, even short-term trends, are ready for more substantial corrections. Because not only are we generally going to be at a lower price range from prior highs in the past, but beyond that as well, if we aren't able to clear through the typical indicator that has served as support, as it did back through the majority of back here in 2023, as well as here in the beginning quarter of 2024, then we are going to experience more down pressure. It's as simple as that. If you really can't get above the 21-day, if price isn't able to continue expanding and is facing resistance at prior support, not to mention priorly seeing over the last month or so, seeing quite substantial chop around that range, and a weakened response versus the last few times when we dipped below the 21-day. Last time we had a 5% move, 4% move. We were able to hold above there for some time. We had another collapse below it. We got above there again off of a nice 3.8% move, cleared through and got well above the 21-day, but then collapsed again. You're already seeing inconsistencies here. You're already seeing problems within price. You don't need me to tell you that, right? We've seen it very clearly with the test down to the 100-day pocket. The question is this going to clear through again? And are we going to be able to hold above that 21-day moving average? Because if we aren't able to, then this means we are likely going down to the 100-day again, if not, potentially down to other psychological levels like the 200-day moving average. We can see this historically, right? If we go back to the last bull market here, You can see very clearly as we came down to the 100 pocket, we cleared through the 21-day, climbed up higher here, setting our new highs around right under $69,000, and then we collapsed below back down to the 100-day. Buyers started to come in, we couldn't clear through the 21-day, and we faced substantial downward moves. And this was really kind of, I think, a cue for a lot of traders. In a similar fashion, we could see it here in April 2021, bounce of the 100-day, 21-day, not able to hold here. We get back below the 100-day. You come down not only to the 200-day, but even worse, you go well beyond that moving average. So I bring you guys this indicator here, not to say it's an end-all be-all indicator, that it's the ultimate indicator for you, but the great thing about moving averages at the end of the day, unlike something like the RSI that might tell you something is technically overbought or oversold, yet it keeps getting sold more or bought more to the upside, like oscillators, all these things out there that a lot of people might use, they can be good, and they can be helpful to some extent, but people not only usually use them wrong, but at the end of the day, they're just not completely deterministic on price, right? At the end of the day, if price can't clear through the 21-day, like if we're not able to get through a price range where we averaged over the last 21 days, over nearly almost a month, right? In traditional market terms, when you're, trading in equities where you don't have, days where you trade on the weekends, kind of tells you a little bit about the state of sentiment in the market, whether or not people are willing to continue market buying and paying a premium on the existing price of assets. So that's the key point here I want to drive with you guys. And again, we can take a look at the fundamental narrative that has been driving Bitcoin's price, that has been driving a lot of the flows, that's been supporting the kind of bid and market order flow, buy-side pressure on Bitcoin's price. And that has been the ETF numbers. The ETF inflows have weakened big time. This is not what we want to see going into the halving event, right? Where we've got the supply contraction, right? Which has got people really juiced up. And not to mention, we should have the demand with it that comes with ETF inflows. But here's the big catcher, guys. The ETF, at least at its current inflows on a day-by-day basis over the last week or so, plus the reduction of Bitcoin supply and halving event, is nowhere near as exciting as the prior halving event was. Like I'm talking about the one back in 2020, right? You had a much more substantial inflation rate reduction in Bitcoin's monetary policy versus this time around. We only dropped the inflation rate by 0.7%. Not to mention, inflows are looking incredibly weak. And while some people like to obviously point out here, and I give credit, these are charts from Capital on Twitter. He's a really cool account, or is it Huddle 15 Capital, I think. Puts out these really great kind of metrics, up-to-date metrics on the ETF inflows. Well, I appreciate him kind of highlighting here the new BTC supply that's coming out with each block, and how this percentage of new Bitcoin being acquired by the ETF is potentially eating up that supply. I think this narrative is very faulty, and it's very short-sighted by a lot of investors, because at the end of the day, the inflows from the ETF, while they're definitely a big part of the equation when they were in the thousands of figures, they're a small, minute difference alongside the Bitcoin block reward reduction from the halving event when you compare the simple question of the broader spot market buy side or sell side pressure from market order flow, which really determines price at the end of the day. You can have OTC trades, you can have bid and asks on the order book, but the thing that's going to determine price, that's going to drive trend direction, is market order flow. Are there more people willing to market buy or market sell? And if it's the latter, if we see people market selling more, that's going to bring prices down. How dramatic that will be will determine on bid or ask on the order book. It will determine on how intense that market order flow is. But market order flow is what drives trend direction. And we can see here very clearly that if we take a look here at the numbers, we're seeing very clearly that if you still account for GBTC outflows, right now the inflows are not that impressive. But beyond that, even if you took GBTC out of the equation, just take a look at where we've gone from back here in, say, February or March on inflows into the new ETFs versus where they are now. We've gone from thousands upon thousands of new Bitcoin being acquired every single day to just a few hundred. With some of the new ETF applications that got approved, seeing outflows. So I understand a lot of people will point towards, obviously, the factor that GBTC outflows are slowing down again, like they were back here in February. And definitely, no doubt about that, that's exciting to see. It might mean that a lot of the Genesis bankruptcy proceeding outflows of GBTC or the sell side pressure, right? which entrance new supply of Bitcoin out of the market, right? No doubt about that. That's good to see. But just because that's ending here, that is not enough for me to determine going long on Bitcoin at all-time highs unless we really are seeing the inflows coming into the other ETFs. Unless we're seeing these numbers churn back up to thousands of Bitcoin a day. You need both the supply contraction and the buy side pressure. We talked about this back even in 2020, that what drives these kind of parabolic cycles or exponential cycles for Bitcoin is that you have the initial supply contraction, and that is usually enough of a catalyst to carry forward price and get that additional buy side pressure. But if you're not seeing the inflows here, and where we need that liquidity to come from, we need some institutional capital at this point, right? Retail isn't going to get Bitcoin from $1 trillion to $10 trillion, right? And so what I'm saying here is if you really want to have that new exponential high, you are going to need that institutional on-ramp. And that's why, again, people got so excited about the ETF in the first place. When I take a look here at altcoins, definitely from the wick lows here, we have a nice recovery here, about $120 billion in market cap, but we are still chopping at that 21-day. We've had a couple days here where we're slowly but steadily pushing there, but still really unable here to clear through there deterministically. Taking a look at others, right? Weak signs here, right? Right at the 21-day, facing chops here, a couple days of wicks here on the candles, not looking good. So until we really get it clear through there, right, at this point, if you have been kind of in cash and wonder whether or not to build a position, wait for a clear signal here that showcases that, hey, this is ready to continue climbing higher. Right now, volume is relatively weak. Buy side pressure here, right? We were facing a lot of resistance at that 100-day pocket, just now barely grinding up here to the 21-day. Prior support here so far in the past, right? People bought the dip back here in March. Currently acting as resistance. Just not saying it's the end of the world. It's not terrible, but I'm not seeing that kind of forward-looking strength where the halving event and the ETF are carrying Bitcoin to becoming this asymmetric asset that just continues to the sky and goes on to six figures. There's a possibility it could happen. I'm not closed out from it, but I'm not seeing it in regards to price. And I'll let you guys know when I see it. But right now, when I look at that relationship with the 21-day here, if it can't get above there and we come back down to this 100-day pocket, this gives me some warning signs where you could really start to see a substantial correction in a lot of these different plays. And it's probably an indicative sign that all assets as a whole, not just crypto, I'm not just trying to be a crypto perma-bear by any means, or I'm making great money in Q1 of this year going long. I'm also not going to lose all the gains that I just made. I'm going to be smart about it. I want to make sure the market gives me the signs that I can enter in and make some really solid bets. Take a look here. I'm going to go through some of our old plays here that we've kept on our radar. There's some narratives that are really just struggling to keep up. Ordinals, for example, on Bitcoin, right, have been fading here since January. Right? We haven't been, kind of long in ordinals. We called for ordinals back here, really. And it made like another, I think, 100... another, I completely got my math wrong there, 280% move from where we were talking about it on the channel, watching for that 21-day retest. And since then, it's just been fading, distributing here. And we've told people to kind of stay away from ordinals. The trend wasn't there. We weren't able to hold on the 21-day moving average. After multiple retests of the 21-day, we started to fade below it. So we've been kind of staying away from it this whole time. I would look for it down here, and it's BTC comparative. This is a custom ratio where I divide ordinals by the price of Bitcoin, or ORDI in this case is the token symbol ORDI USD. And so watch for retest of this kind of golden pocket down here in the event of more altcoin corrections and more weakness in some of these pairs against Bitcoin. Also, I'm looking here at Stacks. Stacks, again, definitely has recovered a good amount from those lows. It tested the 200-day pocket, which is definitely an area where I would find some interest. But as we've seen in the past here, we've had tests of the 200-day. We get bounces above the 21-day. We struggle to hold, and we still collapse lower here. So my point here is to not just go ahead and assume that just because we bounced in the 200-day that it's a slam dunk guarantee. We can see many times where these altcoins, people think, oh, it's at the 200-day pocket, time to go long, and we're going to go back up to new highs, and Bitcoin's going to carry everything forward. But then you find that it struggles to get through there. All right, so just keep that in mind here, right? As we go throughout history, you'll find that it's not a guarantee of anything. In fact, if anything, the 21-day is a much stronger guarantee of letting you know, hey, are we really here for something bigger, or do we have more downside to go? And so far, Stacks is above the 21-day, but it's just hanging by there by a thread. It's just barely hanging on that 100-day pocket. If that snaps through, you likely got a retest down here to the 200-day pocket. So it either means, one of two things here. I know some people would be like, Nick, you're looking at the BTC pairings. Why not just look at the dollar? What I'm here to say is that, look, whether or not you're convicted on, convinced that Bitcoin is going to be moving higher, if you're focused on altcoins where really the major returns are made, as we are focused on here and where we made great returns in Q1 of this year, the key thing is to focus on whether or not they're outpacing Bitcoin. Because if they're not, you might as well just be in Bitcoin. You might as well just be in the position, the safe bet, that is the leading horse in this race. And Bitcoin has made great returns since back in the later part of 2022. So again, keep that in mind here. You don't want to be positioned in lagging plays. One of the plays that has done well here against Bitcoin, I think similar again to Stacks to a certain degree, and I think just has overall better price structure, is Render. But at the same time, we're going to have to see how this plays out over the next couple of days. I like, again, seeing as this fade has been here, there's been a fade down to the 21-day. So far, nice green price action, bid side support. I like to see it. But overall, again, while this is great, while it's had a great recovery from that 200-day, I'm still questioning whether or not we're going to have that ability to really clear through and go back to prior highs, right? And if it's not going to go back to those highs, if it's not going to continue charging forward, I might as well be in Bitcoin or be in cash if I don't think that Bitcoin's going to move higher. When I take a look across the board here, what I see very clearly is meme coins are leading the way. You've got Bonk up 100% over the last 7 days. You've got Pepe up 57%, Floki, Dog with Hat. I go down the list here, right? And there are some other plays as well. You're also seeing, for example, Hedera or HBAR going up big off of news around BlackRock testing out its protocol. I think it was around deployment tokenization platform or some other type of different testing ground kind of application that they're building. Of course, obviously people are buying the news on that. I would not be FOMOing into that so much. You also see as well got other DPIN or AI related plays like Akash Network, other AI plays directly like Fetch, Singularity, etc. that are starting to do well. So again, we're seeing clearly that the solid narratives that have been around for a while, not so many new plays are emerging, at least from what we can see. We're seeing meme coins, DPIN or AI. Those are really the kind of two narratives that still seem to be relatively strong from this rebound. We're not seeing much strength here from the market leaders like Ethereum. Not to say we couldn't get a nice swing trade opportunity on some of these plays, but for like a longer term performance here, right? As we're at these kind of lower ranges, we've got to see whether or not we're going to see that same bid side support we saw back in the past when we were here back in April 2021, here in June of 2022, and here in January 2024. So far, the responses have been weaker and weaker each time. And I think this again just kind of gets to the point here that I think that there can be a lot of altcoins that do well potentially over the next couple months, even in a relatively stagnant market. But I think it's going to come from market cap and capital circulating from substantial large players like Ethereum, for example, other kind of archaic L1s or AVM environments, and do a lot of new plays, new narratives in the ecosystem of crypto that really could start to make those massive multiples. So I'm looking a lot at the small and mid caps here, but I'm not just randomly buying them. I'm waiting for real strength in regards to their price. The big thing I want to let you guys know about, though, is that it's important above all to capture big returns in the market. And in order to do that, you've got to find early stage plays. You've got to be able to catch not only exciting narratives, but you've got to get directly in the plays that encompass within those narratives and actually can lead the way forward. And being able to get into them as early as possible so you're not market buying them on Coinbase or Binance when they've already gone through their launch pad or gone through their initial funding rounds. That's why if you guys are interested in some of those early stage projects, while I wouldn't invest all of your capital in early stage projects, I definitely think that having some kind of allocation to projects raised through platforms like Angelblock, our partner on this channel, could be something that you guys should consider. Now, I wouldn't be talking about Angelblock if I didn't believe in it, guys. I've been an ambassador with the project over the last 2 years. I know Alex, the founder of the project, and a lot of the team members, and I think they've done a phenomenal job building one of the best fundraising platforms in the crypto space. I almost feel bad kind of calling them a launchpad, because while they do function similar to a launchpad in the sense that they allow for new ideas and early stage tickets, open not only to institutional or accredited investors, but also to everyday people in the investor space for crypto to be able to participate in early stage projects. But they have a whole range of filtering mechanisms that other launchpads don't have, and removal of a lot of the trust that usually comes with launchpads that allow you to invest in a lot of really exciting early stage projects. The reason why I really like Angelblock is twofold. Not only do they have great projects, but they also have the fundamental layers to protect investors that other launchpads simply don't have. This is a really interesting story that happened recently. There was, as you all probably know, there's a lot of hype around zero knowledge proofs, and more particularly ETH L2s and alternative L2s to help scale the Ethereum ecosystem. And in many cases, I think still a lot of kind of the attention from Ethereum as they're EVM compatible. But generally speaking, that's been one of the big narratives in this cycle. And there's been one project that's been built or was basically being promoted called Z Casino or ZK Casino. And this was essentially going to be some big casino protocol in the crypto space. Already something that I just wouldn't touch with a 10-foot pole. But apparently there were investors out there, $35 million worth, that wanted to invest in this project some months ago and essentially got rug pulled. This has been a big story on crypto Twitter as of recent. And it's very clear here that Angelblock as a platform would not allow for something like this to happen, because unlike in this case Z Casino, essentially this project that had generally anonymous team members who didn't want to dox themselves and wanted to raise an absurd amount of money off of promises that they were going to build a platform, right? In this case, on the Angelblock platform, if Z Casino came to the forefront and wanted to raise, they would be filtered out practically immediately. Even if they weren't, if somehow they were able to get through and be able to convince Angelblock to list on the platform, the important thing to understand is that they wouldn't get all $35 million right away. They'd have to deliver on key valuables. They'd have to deliver on key things through the kind of tranche release mechanism or investor milestone feature that Angelblock has on its platform. This is incredibly important. And it's important to understand that as you increase your stake of Thol on the platform, you not only get a lot of great benefits in the sense of being able to invest in larger ticket sizes, as well as being able to invest earlier on before other investors in order to actually make sure you actually secure a ticket. But beyond that as well, by having the Thol stake and being able to invest large ticket sizes in the projects, you get to participate in that governance process. So essentially, if someone, for example, is trying to rug or their project is not actually delivering on their promises, then you can essentially vote that they don't receive the rest of the funding if they didn't reach on that milestone. So I think that this is, again, how it should be done. It should have been done like this a long time ago in the crypto space, but unfortunately it took this long for someone as brave as Alex to come out and do something like this in the crypto space. It's not easy to do. From the token vesting to all the different features that Angelblock actually features on its platform that makes it trustless, it makes it strong in regards to its governance. This is why Angelblock to me is a really exciting platform. So not only definitely consider checking out Angelblock and the native token Thol, but outside of that as well, check out some of the fundraisers that are going on for the platform to see what's raising on the platform. In that case, you'll know that you're working with quality projects, irrespective of whether or not they really work out in the long term. It filters down to some of the best quality projects in the crypto sector. Last but not least, I want to go ahead and talk about what's going on in the macro world. Now, I know a lot of you guys obviously saw in one of our prior videos that we talked about NVIDIA having its big down day, down 10% back on Monday. And since then on Tuesday, technically, we saw it back on Friday. On Monday and Tuesday, there's been a nice little rebound here in equities across the board. NVIDIA, as we'll take a look at, has made a nice little rebound. This is a great test example that I want to bring to your guys' attention to talk about how the 21-day moving average and the 100-day moving average can really be our friends here in determining trend direction. Right? No, it's not always cut and dry. It's not always as simple as, if we face resistance here at the 21-day, actually we clear through, that it's an absolute guarantee that, sunshine rainbows would clear through higher, and vice versa. Like just because we struggle at the 21-day immediately when we make contact with it doesn't mean that it still can't clear through. But I generally want you to watch how price reacts with these moving averages, because it can give us hints about where things can be heading long term. It can help us to also mitigate potential downside if we get the trade wrong. I'll give an example of this. Before we take a look on the right-hand side of the chart, let's take a look back here in 2023 during the summer. We started to see very clear resistance in price. We were starting to see chop, more sideways trend direction, and a failure to hold in the 21-day moving average. And from there, we had a collapse after a couple days of facing chop at that 21-day very clearly after 3 solid trading days in equities. It's a pretty good amount of pricing data. We could see that it was probably due in time for a correction. We came down the 100-day, got a direct bounce off the 100-day, faced resistance at the 21-day moving average, but eventually we were able to clear through above here. Now, generally speaking, with the principle that I would recommend about how you can get a trade the 21-day, what you can do is that when you get a clear break above the 21-day, you can build generally a long position. But the nice thing about this, even in this scenario where we got above the 21-day and didn't have the strength to continue forward, we can basically set our stops here and essentially close out of our positions when we come here to the 21-day. And essentially, if you were to build off of the first solid green close here, even at the peak, you're talking about a loss of less than a percentage point. Not really that much. And even if you're trading on an individual stock or maybe, for example, trading options, you're talking about minimal losses, right? Versus just basically buying and holding and hoping for the best. But what we can see here is that once we come down here, right, we see very clearly that we're not holding on the 21-day moving average and we start to fade lower, right? We can start to see how the 21-day very clearly, with an inability to get above the 21-day moving average, is that sign that we're likely coming back down to the 21-day and we're probably going lower. And with equities, it's a little more bouncy here. You essentially get less solid trend direction, whereas with crypto, it's usually much more volatile, much more directional. But above all, you can see the relevancy here. How essentially, if we can't get above the 21-day and we tested the 100-day, it's probably good faith that we're probably going to come down here to the 200-day pocket. And the same goes probably here. We've likely got a chance to come up and test that 21-day moving average, as it's not only moving down, but price has gone through a pretty nice correction. You're going to have some people buying the dip here. And the question is whether or not those dip buyers are really going to be able to not only drive us above the 21-day, but be able to hold above the 21-day. Because at the end of the day, guys, while it is great to buy into capitulation, at the end of the day, where you really make your gains are during the run-ups. So if you don't have the strength to actually maintain a run-up and go to new highs here, then it's not that interesting, right? Yeah, sure, if you want to try to buy every single dip here, that's cool. I respect that. But make sure you've got your stops and protections in place and make sure you're protected, because at the end of the day, this can't clear through that 21-day. And it starts to face trap, or maybe if it comes up slightly above it, but faces resistance at a similar price range back here at around 16,500 on the NASDAQ, and we can't hold above the 21-day, we collapse back below it, it's not only probably going back down to the prior relative lows, it's probably going down to the 200-day moving average, which is down here. And that's not going to leave any bulls who bought in a better off position. It's not going to leave those who've been holding in a better off position, right? So you need to have this kind of cynicism about, just broad narratives and buying and number goes up and to the right. You need to follow what the moving averages are telling you, especially if you're trading, especially if you're in some of the kind of volatile, kind of fast-moving plays like NVIDIA. I know a lot of people are probably feeling the FOMO when you see these kind of bounces here. And sure, a lot of these kind of capitulative candles will usually get kind of corrected back up to the upside. But what I care about here is whether or not we are going to get above that 21-day, because since back here on April 2nd, that has not happened. It's been nearly a month here. It's coming up on a month. We have not been able to get above that 21-day, which used to be golden support here, right? Throughout this run up here, we got a nice solid bounce, huge gap up on earnings, 16%, right? A lot of the time here back in 2023, 21-day was your friend. So I want to make sure above all that we keep our senses and our wits about us here when it comes to trying to determine where price could really be going over the next few months. So 21-day moving average is your friend here. We're going to see if that starts to act as resistance, because if it does, and we cannot hold substantially above the 21-day and make a leg up here towards, I think, the next target level for a lot of bulls, which would be like 1,200, right? Nice $200 plus premium from the prior highs. Still would be some great upside there for a long trade if you're buying right back in at the current all-time highs at around 960 to 970 bucks, right? If we don't see that and we face resistance, we're probably going down well below the 200-day, because history has shown us here, right? And what I've got printed here is a moderate correction, 50% correction, big psychological level. We've seen a 70% correction and 50% correction back here in the past. easily for NVIDIA when it touches this long-term line of resistance, which we pointed out back over the last month or so. So just trying to keep everyone's estimations moderate here, with dollar strength continuing to hold up as it has over the last couple of days, really over the last few months since Q1 of 2024, and seeing a reignition in commodity prices like oil, which, to be fair, is facing a little bit of chop at the 21-day here. We're going to see how that plays out over the next couple of weeks. If that trend direction will be able to come back up, I hold the same standards here for all different plays. If we can't get above the 21-day here, that could be a very good thing for overall equity prices, because it could mean inflation is not reigniting and oil prices and other commodities could be cooling down. We're seeing across the board a lot of commodity price expansion. So keep an eye on all those different things, because those will impact the cost of living. They will impact inflation. And if that CPI doesn't come down, the Fed eventually will have to cut back its estimations on rate cuts in regards to monetary policy. See, I'm rambling so much like this, guys. I just took a massive flight after visiting some family. It was a great time, but I definitely am trying to get back in the swing of things here, a little bit sleep deprived. If you guys enjoyed this video, though, consider dropping a like. It's a great way to support the channel and support the content we put out here on this channel. Drop a like for sleep deprivation. Just kidding. I hope you guys have a phenomenal day wherever you are. Have a great rest of your week as well. Make sure you check out Russ's upload on Friday. Again, if you enjoyed this video, consider dropping a like. And last but not least as well, I want to let you guys know that if you guys are looking to build a longer term portfolio to help plan for retirement, I definitely recommend you guys build a portfolio on iTrust Capital. They have a variety of different IRA, individual retirement account structures that you can set up. It's all legal in the United States, where you can have tax deferred or essentially lower tax obligation on your crypto trading or long-term investing gains that you make. So it's really imperative that you tap into these tax advantage strategies that are completely accessible to people in the United States to be able to mitigate your tax liability. And there's a whole range of structures for those who are independent contractors, those as well who are working, as standard W-2 employees, to be able to basically benefit from these retirement account structures and invest in a whole range of cryptocurrencies, even some of the major meme coins, protocols, as well as DeFi altcoins as well, like Sushi and Uniswap, as well as getting established exposure to Bitcoin, Ethereum, and so many more, as well as precious metals like silver and gold. So if that interests you guys, definitely check out the link down below in the description. You'll get $100 if you sign up with our link down below. But that's going to be it for today's video, everyone. I hope you have a fantastic day wherever you are, and I'll see you guys in the next video. Take care, everyone.